What's up, everyone? It's Caddy with MoneyVest. Thank you so much for joining for yet another Market Open live stream. Today is the big day. Jerome Powell is going to be talking today in less than an hour in the Jackson Hole Economics Symposium, which got started yesterday. So it's a 3-day event. I'm going to be live streaming all of it, and we're going to take a look at the market's reaction as well. If the audio and the video is working well, just give me a thumbs up. Just want to make sure that everything is going good and there are no technical difficulties. And let's just dive right into it. So first things first, we do have the market slightly down. QQQs are actually slightly higher, up over 20 basis points after the sell-off from yesterday. And SPY also bouncing back higher a little bit, up over 37 basis points. And the Dow Jones also up over 44 basis points as well. So it's really going to come down to today if the bulls can recover a little bit of those brutal losses from yesterday, or if you are going to see that continued sell-off down to that support level and maybe even break down below that support level as well. So like I said, less than an hour left. At 10 a.m. Eastern is when we have Chairman Jerome Powell's speech. This again is going to be day one's opening reception and dinner, and today is day two, Friday's session. We got Betsy Stevenson, Chair, Professor, University of Michigan, and opening remarks from, of course, Jerome Powell, the keynote speaker of the Federal Reserve, Chairman and Board of Governors. And of course, later today, we have the macroeconomic environment impacted long-run shifts in the economy, University of Chicago and University of Maryland professors as well. So again, it's going to go all the way till Saturday as well. So tomorrow, we've got a few speakers as well that you obviously can take a look at. There's going to be some Bank of England deputy governor. We've got Bank of Japan governor, and the World Trade Organization also joining later this week on tomorrow. So thank you so much for joining, everyone. And this is going to be on the channel here. We're going to be live over there. And Vol says, I hope people have a sell-off. What an occasion this would be. Yeah, we'll see what happens, right? I mean, it's going to be quite an interesting day for the markets nonetheless. And right now, if you take a look at some of the individual stocks here, so we do have Apple here pushing up over 24 basis points. We've got Microsoft pushing up over 29, and Nvidia here down 34 basis points. So basically now lower than before the earnings were released, right? So it gave back on all the gains from yesterday, and then now it's down even more, and Tesla's flat. So I've got videos coming out on these companies. I've got videos coming out on Tesla, on Neo, Palantir, SoFi. I know how much you guys love those videos. And then another video coming out on a very nice high quality stock that I am going to restart. I'm going to restart the position in that company once again. And then I posted a couple of MoneyVest Europe videos yesterday, so make sure that you do check them out. And then I've got another one coming out later today. So literally, there's going to be more and more content, more and more videos, because again, we've got lots more channels now. So I will be focusing on them. I will be posting more videos. We're almost at 100 subscribers for the MoneyVest Europe video more channel. So again, if you want to get access to these videos focusing on the European markets, focusing on European stocks, there's a lot of opportunity. I'm telling you, I will be buying European stocks. I'm telling you right now, in different currencies as well. So that's where all of that is going to be covered on that channel. So going over to the poll. So let's see, Enphase is on sale. Yep, so Enphase also coming down. We'll be doing an updated video on that. And then, of course, we'll be dollar cost averaging into that as well very soon. So, Getty, I know this is a meme stock, but do you think Virgin Galactic has a future? Not unless they actually are able to generate consistent profitability, right? The moment they are able to do that, then yes, I think there's potential. But right now, it's been, significant cash burn to generate all these spending all these resources, time, energy, money to basically build what they have been building, but they haven't been profitable yet, right? So the moment they actually achieve profitability and they stop losing all this money, then maybe yes, there is some potential, some opportunity that will basically tell us that, okay, it's a sustainable, more viable business. But until that happens, I think it's going to be a shot in the dark. What is the sentiment today? How does everyone feel? Anyone? So yeah, let us know in the comments. How do you feel? So more, what was your strategy during yesterday's sell-off? Did you take any action? So not yet, because as you guys know, that S&P 500's valuation as a whole, I've put down a fair value of close to 4,000. Right now we're at 4,376, right? So we're 376 points higher than where my intrinsic value is on S&P. So not dollar cost averaging here. And of course, for a lot of individual stocks, my fair value is lower as well. Maybe the closest one coming down is going to be Enphase, maybe PayPal. There are a couple that are coming down to my intrinsic value or lower. But other than that, there's not really a lot of deals out there. Unless, of course, we see a more brutal sell-off, more accelerated sell-off. I don't think there's going to be a lot of potential really good deals in the future. So yeah, and if you have any suggestions for European companies, European stocks, let me know, and I will definitely take a look at them, analyze them, do my intrinsic value calculation on the other channels. So that's going to be covered on the MoneyVest Europe channel. So Abhishek, thanks for the suggestion. Do Stellantis, STLA to your European channel, the biggest automaker in Europe. We'll definitely look into that as well. Got maybe another couple of videos coming out on that channel later today. So Kevin says, I feel tired. Same here, exhausted from work. Milan says, yeah, I'm pretty exhausted as well after this week. Again, just been going like back and forth. I did a private video for members only, kind of going over my plans and kind of like where I'm situated now and what my asset allocation mix looks like. So been reading up on a lot of different things. It's been crazy. So yeah, I totally get it. It's been a pretty exhausting week. I think we might be having, so we will have like a shorter week. Shorter weeks are coming up, right? September, October, November, December. We've got lots of holidays. We got lots of, things to celebrate. So we are pretty much entering into a time of the year where there's going to be more spending. There's going to be more holiday season type festivities and trading. There's going to be a few weeks that do have shorter trading weeks. So, yeah, SMCI looking interesting right now. SMCI has been like just on this crazy run on the back of course, a lot of semiconductors, and not to mention, of course, Nvidia did push up SMCI, but intraday sold right back down. And right now, support level is going to stay put at 213, 214 for this company. So very, very significant move to the upside. And I am not really interested in buying this stock anytime soon, of course, unless it comes down to significant cheap discounted values. And that's when I will be looking at SMCI. What are your thoughts on Fubo? The intrinsic value seems good. So Tiago, what is the intrinsic value on Fubo? Let me ask you that. What do you think is the intrinsic value on this stock? Would love to know what your thesis is, what your intrinsic value is on this company. Milan, you need to go back to the bull you went to on your last trip and pray to the bull gods to make Enphase fly, Caddy. So yeah, that was in Italy, and it's kind of crazy, right? I mean, I just don't believe it. I literally don't believe it, guys. It's wild how I last year in 2022 went to this what was it called? The Lucky Bull, right? In Italy. In Milan, actually, there's this lucky bull, and you basically stand on it, spin, I think 10 to 12 times, and you wish for something. And I still remember, like I mentioned this in our Discord, I mentioned this is where I'm at. You guys probably already know what I'm wishing for, and that was in October. It was in October of 2022. Not to mention that our red mic died in October of 22 as well. But it was in the US, right? I was in New York. I remember I was recording videos and it kept going in and out. So the connection was really bad with that microphone, the red mic, of course. And before you know it, we had a full funeral for that red mic, and boom, the markets have gone nowhere but up since then. Literally, just since then, it has been on this peak bull rally for the market. Just crazy how it actually worked out. Yeah, so maybe we'll make it an annual thing, Milan. So maybe we'll do like an annual visit to Milan. Hey, to Milan, and we'll go there and do that once again. Spin in 3 circles. Yep. So quick look at Marvel earnings. We'll take a look at that as well. Why AMD tanked yesterday? Do you know, Alex? So Alex, I am gonna be doing a video on AMD here very soon. So there's gonna be coming out very soon. But I think, as I pointed out in my yesterday's video, is that the logic is pretty flawed when you think about NVIDIA being a very dominant player in semiconductors, in artificial intelligence, and when it reports blowout numbers, it is rallying. Other stocks are also rallying on the back of those numbers, even though NVIDIA is supposedly doesn't have any competition. So logically speaking, it should actually be net negative for other semiconductor companies if NVIDIA actually reported very good results. And I think that eventually played out for a lot of individual companies. Okay, so did you move to Dubai, Caddy? How is it compared to the US? If so, above, yes, I have. Again, I did a private members only video yesterday going over this entire move, and why I made the decision. And then, of course, what my plans are moving forward with the asset allocation. There's going to be a lot to think about after you watch that video. So it's super, super insightful, and what my plans are with the 10 different asset classes that I'm going to be investing in. Are the bulls out for today or more selling ahead? So again, we'll find out, right? I mean, we'll find out what happens after Jerome Powell starts talking. Since you analyze European stocks, can you do a technical analysis on CSPX? It's on the LSE, tracking the S&P 500. Yes, so we'll do even some live streams on Money Invest Europe channel, and that's when I'll take requests for European stocks, and we'll analyze it over on that channel. So currently, which of your stocks is negative territory? PayPal definitely is one of them. Is definitely down from its from when I bought it. Richard, weird background music is playing. Huh? Is it really? Do you guys hear like any music? Maybe it was a Kansas City Fed. I mean, did you guys hear it? Okay, fan. Okay, I don't know what it was. What time does he talk this morning? So 10:05 a.m. Eastern. So in less than an hour, he's going to be talking. Yeah, 3% in single day, a sign of crash, not a correction. Musicful says, yeah, that's a pretty substantial pullback, right? Intraday, because we gapped up and then sold right back down for an aggressive sell-off. So that I think is definitely pretty aggressive. What are your thoughts on PDD? TEMU is the #1 app in the App Store and has crazy growth ahead of it. So I'll add it to the watch list and for companies for us to look into as well. Listed on the NASDAQ. Let's see, we've got very nice consistent revenue growth. Quarterly numbers also coming in very nice, very profitable, down 8% on a year-to-date basis. Looks like we have done some analysis on this company, so we'll add it to the main watch list, and then we'll see if we can do analysis on this company to see where it ends up trading and what the fair value is going to be for this stock. Caddy, I recommend listening to recent short interview with Professor Demodran for CNBC about NVIDIA. Very interesting. Give some food for thoughts. I will definitely check that out. If he is talking about NVIDIA, we'll definitely listen in what he has to say. Any worries on PayPal going from negative net debt to a positive net debt? So right now, I would say not really, because they do have $3 to $4 billion of cash cushion at the moment for negative net debt, because they do have long-term investments as part of their balance sheet as well. So I think they've got a pretty good runway to turn things around. So I think 2024 is going to be a pretty pivotal year for both PayPal and Enphase, because they're going to be comping over some reasonably easy numbers, and not to mention year to date they are both down pretty substantially, Enphase more so than PayPal, and I think next year there's going to be an opportunity for them to basically recover some of those losses. So they are 1 year behind on some of the tech rallies that we've seen from this year. Tristan, how many times has the market been up in an election year? Wondering about 2024. So we'll do an analysis for that. I don't have the statistics or the data off the top of my head, but we'll take a look at it once, of course, 2024 is here, and next year is, of course, election year. So we'll do an analysis, seasonal analysis, all those things when the time comes. All right, so I'm going to try to answer as many questions as possible. That is in reference to your Red Mike dying thing, Rod Sterling and Twilight Zone. Got it. Okay, now it makes sense. Although we all hope Powell's speech to end up as music to our ears. Roller coaster ride once again. PayPal bullish next week, or are we still going down? What are your thoughts? So support level we've got for PayPal at around, I would say like 60 or 57, $58. So that's going to be very strong support. We kind of bounce off of that level. It's kind of hard to say like on a day-to-day basis, week-over-week basis, where exactly is the stock price going. You can get a good idea, but at the end of the day, like you don't have any certainty as to what's really going to happen. So we've got a support at $57.50, resistance all the way up to $69, $70, and those are levels that we're watching. Yeah, so he's still holding on to 50% of his position because he's standing to the crossroads, but he's likely to hold at the moment. Yep, so that's true. So Nathan, Caddy own 100 shares, PayPal at $50 each. Should I keep them or sell them? What's a good selling price? So again, you got to ask yourself, are you trading or investing in the company, right? If you're trading, then anything over 15-20% for a nice swing trade over the next few weeks to a month is a pretty good, decent profit. So $50 would put you right there. Pretty good job in kind of picking that bottom. So $69, $70 would be a good resistance level right here. to be taking that profits off the table. 20% nice swing trade. But if you are investing for the company long term, then as I've mentioned before, I think over the next 3 to 5 years, if PayPal plays the cards right, if it executes well under the new CEO, it's easily got the potential to be back over $100, if not more than that, over the course of next 3 to 5 years. So again, got to ask yourself the question: are you trading or are you investing in this company? Anyway, so let's see. We've got less than 6 minutes left for the markets to open and less than 40 minutes until Jerome Powell's speech. And markets here, pre-market right now, is a little bit of a gap up, slight gap up, after, of course, the brutal sell-off from yesterday. So SPY, QQQs, and the Dow Jones, they are all green and, of course, pushing higher. We've got the 10-year yields up to 4.2.5%, so a little bit over 33 basis points right now. And of course, a lot of individual stocks are basically flat or slightly down on the day so far. So it's all going to come down to JP. JP's got all the cards at the moment. Yeah, so sell calls on PayPal. Yeah, you can do that as well. Again, depends on, but then again, premiums are not that high for PayPal, right? Nobody really wants to buy calls on PayPal because the sentiment's not that great. You want to do that when you are literally at the peak of that trend, and you can then maybe sell in the money calls, at the money calls, to generate the highest amount of premiums and have that highest probability of getting called on your shares, so that you can exit that position with another premium, right? So that's probably one of the best ways to do it. Also do cost collars if you are up a lot, but that's only doable if you are up significantly, and of course the share price is moving higher. So AMD $85 puts, yeah, so that's something that we are going to be looking at, not 85 specifically, but closer to $80 or sub 80. So we'll be looking at as well. So Rich, morning caddy, I was thinking instead of you buy 2 stocks of Nvidia, why don't you buy SMCI instead? I mean, we could, but again, it's more of an experiment, right? Both of those valuations have gone up like pretty substantially, so it's really, the bottom line is the experiment itself. And whether they are able to perform better than some of the other stocks out there over the next 12 months, considering that they've already moved up so much. So that's really the whole point of that experiment. Whether it's SMCI or Nvidia is just matter of opinion or preference, but the real question is, of course, based on valuation and returns. So Walgreens support level, I think we broke down. Yep, so we broke down below that support. Next support, unfortunately, is going to be down to $20 per share. Of course, it's been underperforming and it's been brutal. The yield has jumped up to over 7.5% for this company, and it's been a little bit of a descending triangle for Walgreens. It did break down pretty aggressively, and the next support is going to be down to $20 for Walgreens. That's going to be that next level. Where SMCI is still undervalued, I don't know about that. I mean, it has rallied pretty significantly to a point where, yes, on a PE basis, it may seem like an undervalued stock because it's trading at a low PE. So if you come over here, 24, 25 times multiples may seem low, but it's also coming from 10, right? Back when we were analyzing it in March 2023, it was trading at 10, right? Sub 10. So I don't know about being undervalued. I mean, if anything, it's going to be close to its fair value or overvalued, but certainly not undervalued, in my opinion, of course. So Srinivas, I'll take a look at that company as well. I'm not too familiar with RIOV, but we'll take a look at it, eventually. So opinion on ASML, do you believe it's a favorable investment at its current level, or do you foresee potentially reaching levels around 643, 606? So with ASML, I've got a lower fair value, right? So I think sub 600 is what I'm really looking for. 588 or even lower. I mean, the lower the better, right? That's the bottom line, right? So of course we've got an intrinsic value, but then anything below that is better, right? Lower the better. Like if I could buy every stock in the market for 1 cent, I would do it, right? I would do it tomorrow. I would sell everything and I would just buy every stock in the market for $1 or 1 cent. So the lower the better. That's the idea. But of course, I think I've got a fair value of sub $600 on ASML. So Vlad, what is your question? I didn't see it. Oh, right here. Look at company UI. I would like to buy today. What do you think of yesterday's report? So UI is not profitable yet, right? Or maybe it is. Maybe I'm thinking of a different company. Oh no, okay, it is. So very strong, consistent revenue growth, a little bit of a decline in 22, profitable company, down a little bit over 3% yesterday, down another 2.5% today. Market cap's at 9 billion. Volume's really low. Wow, it's only 64,000 shares. I wouldn't even bother right now because it's actually quite surprising that it is a profitable company with very nice margins and growth. $9 billion company and such low volume. That's so crazy. Like even the 5-minute charts look so distorted. Like this is what you get. There's no liquidity. Nobody's trading this stock. Which definitely is interesting. I mean, you would think a company that is actually profitable, growing revenues, 9 billion is not a small market cap. You think that it would be trading, there would be a lot of shares trading, down 44%. Maybe I'll add it to my watch list. Maybe I'll look into it more, you know, see why there's no liquidity, there's no volume. Yes, so Alvin, I will be staying up till Powell's speech. Look up the public float on UI. So you got 60 million shares. Yeah, I mean that's common shares outstanding is not bad. That's pretty. I've seen less. Like there's companies that are with a lot less shares outstanding, like CMG for example, Chipotle, right? Just an example. You've got 27 million shares, right? I've seen companies that are even like 2 to 3 million shares and still have a lot of volume. UI has like 60, 70 million shares outstanding and has no volume. Anyway, so yeah, so Murich, that's some. I have to go back and rewatch that video because that is probably based on very, I would say, aggressive growth expectations on SMCI. Because again, we're kind of like looking at, okay, what is the growth for the company over the next 5 years? And I may have gone with 25 or 30% in that video. If that's at $400, then I'm definitely sure that I went with like 25 or 30%, which does seem a little bit more on the very optimistic side. So if I notch it down, say 20%, 18%, 16% growth numbers, then I'm sure it's going to be sub 200, sub 250, around those levels. And of course, we got to notch down the P multiple as well because of the lower growth rate that we're going with. So, but anyway, so yes, the markets are open. We are pushing higher a little bit on the NASDAQ here, a little bit up over 50 basis points, so 0.5% green. We got the S&P also moving higher, 42 basis points. We got the Dow Jones also rallying over 177 points on the day so far. It's the calm before the storm, so in less than 40 minutes, we've got Jay Powell giving us a speech at the Jackson Hole Economic Symposium. So we will be listening in on what he has to say, and of course, we'll take a look at how the markets react to that as well. So Teladoc, I think I've done a video on Teladoc recently where we went over everything. This right here is the downtrending, sort of descending triangle, I would say, like lower highs and a horizontal support sitting at $22, $23. So this right here is going to be that level to watch as a support for Teladoc. And of course, resistance is going to stay put at these lower highs for this company as well. So oversold right now, very much on the RSI and the MACD. It's been selling off pretty aggressively. Not a profitable company. In fact, very, very massive amount of losses. So eventually, if and when it actually does turn profitable, we can take a look at this company as well. Okay. If you have a sell-off after JP's speech, should we buy now or wait until September, which is the worst month for the markets, as what you always say? Yeah, so seasonality-wise, Ken, you don't have to type in the same question 5 times. I'm going to get to it. So we got to respect other members as well. You don't have to copy and paste if you don't want to get banned. So don't do that. So bottom line is, I think fair value is something that's really important, right? 4,000 is what I'm looking for on the S&P. So if you do see an immediate sell-off, depending on what Jay Powell has to say, then that is going to be a potential opportunity for maybe a swing trade. But if you are looking to dollar cost average more from a long-term perspective, from an investing perspective, then of course I would be waiting for those fair values to get hit. So regardless of what happens, on a day-to-day basis or week-to-week basis, we're really looking for our intrinsic values to get hit. So the moment we get to our fair value, then we'll be ready to buy. So Anyway, so that's okay. First pass here, but again, if anybody does that again, obviously you are off this channel. All right, so looking at end phase right now, we are flat at the moment. It's come down to our good deal level, so I'm most certainly going to be buying shares today. If not, certainly we'll be looking at selling puts down to like 110s or even 105, as it comes down to a very attractive sort of level, a level that we have validated previously many times, right? So May 21. Jan 22, and this right here obviously is right now. So July, August 23. Very oversold on the RSI MACD, no doubt about it. So trading at a good deal level. And that's been the narrative for end phase, right? It's been selling off on the back of some earnings misses, comping over some very tough numbers from last year, higher interest rates, lower demand. And that's what's causing a lot of this sell-off. And of course, at pre-40, it was incredibly overvalued, right? So trading at very significant multiples. But the fact that it's down 64% now doesn't make it like undervalued by any means. But yes, it's coming down to some very attractive levels at 122. Of course, $100, sub $100, the lower the better. Again, the lower the better, the lower the risk is as the price is lower. Okay, so let's just take a look at the bond market as well. I've got a couple more videos coming out later today that I don't want to give too much away, but they're going to be very interesting with regards to what's been developing over the last couple days here, especially on a more political front as well. So that's a couple more videos that are going to be covering that. But let's see. Seven, when JP drops everything, you will be buying end phase. Yes, if end phase continues to come down, I think that would be a good opportunity. Square, looking for a prime swing trading candidate. I agree. I think it's come down to a very nice support at $51, $52, kind of like a very similar level that it's bounced off of multiple times. Now, just because it's bounced off in the past doesn't mean it's going to happen again. But an understanding of the price action from the past gives us some understanding of what is to happen in the future. Obviously, nobody knows it 100% certainty, but our real edge comes from doing these types of analysis and understanding the risk and reward, right? The probability. Trading is all a game of probabilities, right? If you even have a slightest of edge over the market with respect to low risk and high reward, over time, right, you're going to be successful. Maybe once, twice, you're going to fail. 3 times, you might fail. But over time, if you do it consistently, you practice low risk, high reward opportunities, you're going to work out. You're going to obviously be successful long term. So Trump is back on Twitter. Hims, I have not looked at. I think I've done a couple. Actually, I've done a couple videos. Let me take that back. I've done a couple videos on Hims and hers in the past, starting to break down below this higher low. Next support down to 396, closer to $4 for Hims and hers. So that's going to be that next support level to watch for this company. Of course, RSI and MACD also coming down pretty aggressively at the moment. All right, so got less than half an hour now for the Fed chair speech, and I want to know if there's already something that's going on, because their YouTube channel doesn't have like a live stream or anything that's scheduled. So maybe they started like 10 minutes before or 15 minutes before, but I want to see if there's already all right, so let's just click on that. Yeah, so see, it says Federal Reserve Chairman Jerome Powell's remarks will be streamed on the Kansas City Fed's YouTube channel. This is the YouTube channel, Friday, August 25th, 10:05 a.m. Eastern. So I guess we just gotta wait for them to start the live stream, because there's nothing scheduled. So I'm assuming they just like start like 10 minutes before. So yeah, we'll keep a close eye on that. Yeah, DXY been on a rocket, so definitely been pushing higher quite significantly. Let's just do a quick poll for today for what Jerome Powell is going to say and sound like. So Jerome Powell today, hawkish, dovish, and then we'll see what the polls results are going to be like. I do think that he is going to be hawkish like normal, like usual, right? But the markets may not react to what he has to say as much as last year, right? Last year was obviously brutal, right? Because we kind of went through significant rate hikes. It was just the starting, it was just the beginning, although they started in March. And then, of course, by April, May, June, July, August, 4 months, 5 months later, we were pretty high in rates, but they were expected to go higher. However, take a look, 21% probability now that the rates are going higher in September, 25 basis points. This was at 90+% at one point. This is like less than 10%. And now we've more than doubled. So, that just goes to show that, okay, market may be coming around to the idea, to the fact that Federal Reserve may end up raising interest rates one more time. So September meeting. So again, up until 1 week ago, this number was 11%, and we were at 89% probability that the Federal Reserve is going to keep rates steady. And of course, now this number has come down. This one has moved higher. We're back to the same as where we were about a month ago when it comes to interest rate expectations. 21%, 21%. This number has also come down to the same as 1 month ago. Yeah, DocuSign or DOCN, is that? No, that's a different company. Tanking pretty heavily. Let's just take a quick look on that. DOCN, DigitalOcean. Okay. I think I've done a couple videos on this stock before. Okay, so not profitable yet. Last quarterly earnings, maybe a small profit, but revenue is growing. Profitability is not. I would put down 2 support levels. One of them is already starting to break down, and the next level is going to be down to $22.95, closer to $23 for this company. Resistance is going to stay put at $46, $47 right there. Valuation under 5 times sales. There's no P multiple because it's not profitable, and price to cash flow is going to be 15 times at the moment in terms of their cash flow multiples. So it's not like a super expensive stock, I would say, but at the same time, they're not profitable yet. And let's just take a quick look at the balance sheet. So they do have actually positive net debt, about $1.1 billion. So they're a software company with very low margins and a positive net debt. That's not very good about the way they're running their business, right? Most software companies, companies that do engage in cloud infrastructure, providing all the different services that have high margins. So if I come over to statistics, gross margins are at over 60%. That's really good. But the net margins are less than 1%. What does that tell you? That tells you that they are spending a ton on operating expenses, on R&D, SG&A, and they're also taking on debt to do that. So eventually, if they can figure their stuff out and they can turn profitable with higher margins on the net profit side and improve their balance sheet, then I think DigitalOcean's got a lot of potential. But until then, just got to be on the sidelines for this one. Okay, so 72% hawkish and 28% dovish. I want more people to participate. Only 95 votes. By the way, only 60 likes. Come on, guys. Come on. We're better than that. We can get to at least 200 likes here over the course of next hour as I'm live streaming Jerome Powell's speech. But yes, Rio Tinto, LAX. I will be doing a video on that in our MoneyVest Europe channel, because this is a company that is based out of London, or I think the UK. Yep, so London, United Kingdom is where they're headquartered. So we'll be doing an analysis on this company in our MoneyVest Europe channel. So I want to keep the US and Europe a little bit more dedicated channels for each markets, so that we have, again, better time sorting through the playlist, sorting through the videos, and of course, a lot of the analysis on that is going to be using the intrinsic value spreadsheet in pounds and euros. Today I was doing a video on one of the companies that are listed in the UK. It is a Swiss company. The video is going to be coming out later today, but they were listed as GBX, right? GBX is a representation of pence, and GBP is a representation of pound. And I had the longest time trying to figure out what is going on, because every time I calculated my fair value, it was like so much lower than the actual price that it was trading at, because that price was in GBX and I was calculating my value in GBP. So it's a learning process, and we're going to have to go through this, because there's going to be a lot of different details and different things to look into when it comes to European markets, because there's so many of them. And of course, there's different structures. Some of them announce semi-annual earnings. Of course, different currencies, different metrics, all these different things. So I'm excited. So Milan, yes, we'll be doing a video on that as well. I think there are brokerages that allow you to do that. Interactive Brokers is one of them. And, it's really just finding a global broker that allows you to basically trade and invest in foreign markets, right? So we'll be diving into that as well in one of our other videos. So we'll be talking about how to basically invest in European stocks through, of course, Interactive Brokers or any other broker, global broker that's out there that's going to allow you to basically trade and invest in other exchanges. I'm in the process of opening up a couple different brokerage accounts as well here in the UAE. That will allow me to basically trade, invest in European stocks, Asian stocks, and other markets as well, emerging markets, and that's where we're gonna do. Like, we're gonna get out of our comfort zone, right? The U.S. has been absolutely phenomenal. It's been a great market to trade and invest in. It's still gonna be the core, most liquid, most popular, but there are opportunities in other markets, right? That's one of the reasons why I'm investing in India. That's another reason why I'm looking into European stocks, right? Because there are opportunities, ways to diversify, ways to grow in those markets. So Forex trades related video would be great. Love all your other videos, very informative, educational. Yes, so I actually did a private members only video yesterday. I mentioned to all the members all the foreign exchange currencies that I'm going to be investing in. Again, I'm not going to be trading Forex, but these are exchanges, currencies that I'm going to be holding because of all the different travels. And then, of course, I don't want to basically have that spread of buying certain currencies and then selling different currencies, so that you obviously take a pretty significant hit when it comes to that spread. So mention 4 to 5 different currencies in our members only private video, currencies that I will be holding and will be buying more of as time goes on. But we'll see if we can actually do a video on that as well, going over some things in more detail. But bottom line is, you obviously want to have the most optimal, most tax efficient strategy of accumulating and growing wealth. That's the bottom line, right? So in any way you can do that, I think that's one way to do it. Timothy, why don't you trade Forex? I mean, it's just never been something that I've particularly been interested in. Maybe later down the road, I would dive into that as well. But right now, it's just because, again, foreign exchange, you gotta it comes down to valuation for the most part, right? How do you value a currency, right? It's going to be mostly tied to its country, right? The country's economy, and macroeconomics plays a significant role if you are looking to trade. I mean, foreign exchange, if you are trading, you got to be looking at very, very significantly shorter time frames if you are day trading. Investing is really going to be more of a long-term thesis, and swing trading becomes more about macroeconomics and understanding different types of variables. It's a whole different market. So all right, let's see here. So Peter, for SE, I've taken a couple of day trades that I've already mentioned. We will be looking into that once again if there is potential opportunity, because it is coming down. It is down another almost 8% this week. So next support is going to be $26. We've already broken down below the support, and we've got that net liquidation value for this company as well, because it's got a net debt of about $2.5 billion. We got still long ways to go. And total assets are $17.6 billion. Total liabilities are $11 billion. So $6 billion worth of equity is what the company has. And right now it's trading at a $19 billion market cap. So if it continues to end up selling down here, it comes down to $20, $25 per share. I mean, at some point, this is going to start to become like a no-brainer, right? Because same thing that we did with Twilio, which came down to its NLV, right? Net liquidation value. So at that point, of course, we'll start looking into it from a more long-term perspective or swing trading perspective as well. Timothy, thoughts on Singapore market? So yep, so that's also going to be part of the Asian market. Again, I don't want to do too much with the limited time that I have, but we are going to be, of course, doing Money Invest Asia, where we focus on China, India, Singapore, even Malaysia. I read an article earlier where Malaysia is also going to be a very, very important market in the Southeast Asian sort of region. And there is going to be, I think Amazon's going to get more involved in Malaysia, building their hubs over there as well. But there was definitely something that I read about that market that piqued my interest. So Got a long ways to go. Again, it's baby steps, step by step. Right now, of course, we're kind of starting with European stocks right now, but then eventually we'll be looking at Asia, Southeast Asia, and then the Middle East. Because I'm telling you, there is opportunity, especially if, yeah, there's gonna be very specific strategies in the UAE market that I want to introduce to all of you because it's very, yeah. I'm not gonna. I don't want to give it away too much because I've been thinking about it. I'm gonna start doing it now, starting next week. But yeah. So in the UAE markets also, and of course Middle East, Qatar, Saudi Arabia. Crazy VIX on Nvidia here. So let's see for what's going on with Nvidia right now, pushing up over 39 basis points. So definitely at an all-time high yesterday at over $502. Of course, sold off intraday, pretty significant sell-off, but right now it's starting to push right back up. So what do we have here? We've got Tesla pushing up 2.3%, not bad. We got Nvidia up over 28 basis points, so not a whole lot, but Apple flat. Microsoft also pushing up close to 1% right now. So let's see. JT, avoid Malaysia stock. I'm kind of curious as to why you would say that. What's the thesis? Would love to know. Okay, so still nothing. It's going to start in 20 minutes. We don't have a link from Kansas City Fed yet. 10:05, right? So actually 15 minutes. 15 minutes to go, and we still don't have anything. Great. Oh, there we go. There we go. Now it comes up. All right, perfect. So the event will begin soon. Less than 15 minutes to go. Invite your friends, invite your family members, invite your significant others, invite everybody to this live stream so that they can watch it with us, see the market's reaction. And of course, everything is going to be tied to Jay Powell, right? Jay Powell, whatever he says, is how the markets are going to basically move. So what are your thoughts on short selling Affirm? It's a party. Affirm, like, think about how many retailers are beginning to see high credit card delinquency rates. Yes, so I think buy now, pay later is not going to end well, in my opinion, because a lot of people have been using that buy now, pay later service, and especially when interest rates are going higher, you are going to potentially see a lot of delinquencies. I think you just have to look into the loan book of a firm and how credit worthy their borrowers are using their services, because PayPal's loan book was very strong, right? That's one of the reasons why they were able to sell that loan book to KKR, as KKR want to generate like a stream of income through their buy now, pay later loans. So a firm, you got to look into that. If a firm specific losses are an outlier, then yes, it can be a good opportunity to short sell this stock, or basically take a short position on this if and when it materializes. But it's really going to come down to looking at under the hood, the fundamentals of the company, and whether their borrowers are credit worthy or not. If they are just lending to anybody, if anybody can use buy now, pay later service without having a job or income or whatever, then yeah, I mean, there could be opportunity for that. But it definitely depends on what they are basically doing. Bring out the beer with the orange. Are you settling in DBX? Yes, I am. So Komeda says, if you told me back when I was in school, I would be excited to hear the Fed talk about the economy, I would have called you crazy. That's how it goes, right? That's how it goes. I know it's crazy, but it is also interesting, exciting, and the thing is that it affects everyone in the world, right? Whatever Jay Powell says, whatever Janet Yellen says, whatever Andrew Bailey says, whatever Christine Lagarde says, like these are, on paper and in reality, these are some of the most powerful people in the world, even comparable to some of the presidents and prime ministers and politicians. And of course, obviously we put celebrities and athletes like at the top of the pedestal, but these are the people that are actually making a difference, making a change, good or bad. Of course, it's for us to decide, but at the end of the day, they're the ones driving policy, which is affecting money, which is affecting everyone in the world, right? Monetary policy directly affects rates, which affects everyone. So I think it is important for everyone to keep a close eye, paying attention to, what they're doing on a day-to-day basis. Maybe not on a day-to-day basis, but like more on a month-over-month basis, to have a good understanding on what's going on. I remember, I still remember what my dad, growing up, what he used to force me to do every morning? If anybody guesses this, SoFi shares. Milan, this is your opportunity to buy for me to buy SoFi shares. So this was every morning, wake up, and my dad used to basically encourage me, not really force me, but encourage me to do one thing, for maybe like 10-15 minutes. If anybody can guess, bring orange juice. No. Read the newspaper. Yes, you guys got it. Read the paper. Yep, Kevin got it. First one. Man, you guys are on point. Yes, read the newspaper. That was it, because having a good understanding of what's going on around you is very, very important, right? Read. It was very important. But yeah, other answers are pretty good too, like meditation, drinking water, like all those things, super important to keep you on the right track, right? Mentally, emotionally, all those things. But yeah, reading the newspaper was one thing that my dad kind of encouraged me to do every day. Anyway, SoFi shares incoming. Milan, are you even keeping track though? Like, I've lost track of how many SoFi shares do I have to buy. So you gotta let me know in the Discord. Yep. So Elle says I had to read the newspaper also as a child, and unless it's fake news. PacWest here, coming in with, come on, newspapers. Newspapers like the most traditional way of getting your news. It was like so like, now obviously news travels literally within seconds. Of course, you know, I'm sure there's a lot of people that have got great stories on how they used to consume information 20 years, 30 years, even 50 years before technology. But it was obviously a time when you used to basically wait for the next day for the newspaper to come in, and it was just a crazy time. Now it's like literally on your hands, in your hands, fingertips. Now it's a wake up and read Twitter. Yes, Twitter is a great source of both comedy and news. Can't argue there. Anyway, so Tesla pushing higher. So among the large cap big tech, we do have Google and Nvidia basically flat. Tesla's the only one that's rallying a little bit, and Netflix is up close to 2%. And then other ones, we've got Peloton, UI, DraftKings, Intuitive Surgical, so ISRG. We had a trade idea on this one this week. It is up another 3.7%, so pushing up very nicely after getting a nice bounce off of 287, right? So this is something that I basically did a video on. I think it was earlier this week, earlier this week, I think, was the video. I think it might have been Tuesday or Wednesday that we talked about it. So obviously very oversold, showing signs of very nice potential recovery here. The optimistic target's up to 359, but you know, resistance is going to be up to 333, 334 as well. So that's going to be another resistance level to watch for Intuitive Surgical. Checking the X every morning. David says Twitter makes my head spin. Yeah, it can get a little crazy sometimes. Do you guys think that Elon Musk is going to be able to turn Twitter profitable ever? I think it's going to be very difficult. I think any text-based messaging app or text-based content consumption app is just going to have a tough time monetizing. Like, it's the only way I see it possible is that if a lot of creators start using the app as a way to basically connect with their audience and connect with their followers, and they charge whatever X amount of money per month, and Twitter basically takes small fee out of that as a way to basically provide them the platform to do that. That's one of the very strong ways to do it. Advertising, it's just difficult. It's difficult. Pavneen says, of course, but it's difficult, right? I mean, it's not really been consistently profitable for a very long time. Same thing with WhatsApp. WhatsApp's never been profitable either, or forget about profitability, let alone generate revenue, right? That's never really materialized to a point where it's any significance for Meta. So they can only go as much as they've got the backing of billions of dollars, and once the backing goes away, I mean, you've got to either be profitable at that point and be self-sustaining, or you got to shut business down. So yeah, Snowflake, I will be doing a video on very soon. JT, what if Elon buys Meta? He won't be able to. I mean, Meta's too expensive for him to basically even consider. Meta's market cap's over 738 billion. Elon's worth 200 billion. So there's no way he's going to be able to buy Meta platforms. And even if he was, there's no way Zuckerberg's selling it to him because of all the feud between them. So I'm kind of excited if that fight ends up happening. Super excited to see that. We should live stream it. We should live stream and watch it. Or maybe no. I think it might be behind a paywall. So you may not be able to live stream it. So again, we'll see. We'll see. Anyway, so we've got less than 6 minutes for this thing to start. I'm going to do an audio check once Jay Powell starts talking. And we'll also minimize this to a point where we've got both the market's reaction and, of course, Jay Powell on the same screen. So we'll do that. And again, we'll just turn that up a little bit here. And we're going to be ready very soon here. Peter, I don't think Elon bought Twitter to make money. So here's the thing, right? If it's not making money, it's costing you money. And how long do you think that can go on? Right? If he's any business in the world, if it's not self-sustaining, it's going to eventually die. That's bottom line. Economics 101. I think I heard something. Yeah, I think they already turned the audio on. So what we're going to do is we're going to keep the S&P over here. Switch over to the 5-minute chart. Actually, we'll put the NASDAQ up top here. And then, of course, we'll put the S&P here. And behind me are going to be the yields. 5-minute yields.
Good. All right, I'm just fixing the table here.
I get, you know, it needs to be. It's not even there.
It's the...
Why did they even turn on the audio right now? Can you guys hear that, by the way? Timothy, or someone's behind you. Stop. Stop. Is the audio good? Okay. All right, so audio's good, video's good.
Yeah, so I'll just, I assume...
I don't think they realize the audio's on. 4 minutes, folks, 4 minutes. Again, like on the stream, we've got 187. Let's just get to 200 already. Share this live stream. All you have to do is copy the link and share it. WhatsApp, Instagram, whatever you prefer, so that more people can join us and, of course, listen in on what Jerome Powell has to say and how the markets react to his testimony and his speech. So I've got the NASDAQ up top here, top right. We got the S&P over here.
I want to welcome you to the 2023 Jackson Hole Conference, Structural Shifts in the Global Economy. Chair Powell, the floor is yours.
That was brief. And I know brief. Thank you, Betsy, and good morning, everyone. At last year's Jackson Hole Symposium, I delivered a brief, direct message. My remarks this year will be a bit longer, but the message is the same. It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective. Today, I will review our progress so far and discuss the outlook and the uncertainties we face as we pursue our dual mandate goals. I will conclude with a summary of what this means for policy. Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which these lower readings will continue or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress, it is useful to separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well. And we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer run trend. And recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year, but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54, and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
So overall, I think I would say on a net basis, it was kind of like a neutral speech. It didn't really feel very hawkish, so to speak, right? It felt a little bit more on the neutral side. Obviously, focus very much is on core PCE, which is still way above the Fed's target. 2% is still the target. And moving forward, the totality of the data incoming is what's going to dictate really where the interest rates end up going, whether they have to raise rates further or they have to keep rates neutral and hold them for longer. There was obviously no conversation around rate cuts, which is what the market's been pricing in. But we're seeing a very nice rebound back higher for the markets, a little bit from 13,500. It's rallied over 1% in the last 10 minutes alone. The NASDAQ has, and S&P 500 has rallied a little bit over 29, close to 30 points at the moment. Of course, Dow Jones is also pushing higher. Yields have started dropping a little bit after he started talking. So I'm going to do a separate video going over kind of like a summary on what he basically mentioned, and of course, a little bit of a review of how the markets reacted. But that's going to be it for today, everyone. So thank you so much for joining in for this Jackson Hole Economics Symposium speech. I really appreciate you guys. Make sure that you drop a like, of course, subscribe to the channel. Let's see if we can at least get up to over 300 likes here from all the viewers. And again, we have 3 more channels, the MoneyVest Reads, MoneyVest Europe, and MoneyVest Real Estate channels that you can subscribe to get content dedicated to those specific niches. So again, link's going to be down below. Very happy to have you on board. As always, happy investing, and I'll see you all in the next